This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices were little changed on Tuesday as a massive winter storm hit crude production and affected refineries on the U.S. Gulf Coast, with price rises offset by a resumption in supply from Kazakhstan. Brent crude futures were down 6 cents, or 0.1%, at $65.53 a barrel at 11:46 GMT. U.S. West Texas Intermediate crude declined 1 cent, or 0%, to $60.62 a barrel. The U.S. faced a loss of production as a severe winter storm swept across the country, straining energy infrastructure and power grids.
Slovakia will file a lawsuit to challenge the European Union's decision adopted by a qualified majority to ban Russian gas imports, Prime Minister Robert Fico said on Tuesday. EU countries on Monday gave their final approval to ban Russian gas imports by late 2027, which Slovakia and Hungary both opposed. The ban was designed to be approved by a reinforced majority of countries, allowing the EU to overcome opposition of both countries, which remain heavily reliant on Russian oil and gas and want to maintain close ties with Moscow.
Moving on to the top news in the energy sector.
Indian oil refiners are only being offered small volumes of Venezuelan crude as most supply is heading to the United States, 4 refining executives said on Tuesday, slowing the return of the South American supply to the world's third largest importer. Trading houses Trafigura and Vitol began marketing Venezuelan oil this month after an agreement between Caracas and Washington for the U.S. to control 50 million barrels following its capture of Venezuela's Nicolas Maduro on January 3, with proceeds going to a U.S.-supervised fund. Since then, Indian refiners, Reliance Industries Limited, Indian Oil Corp, Hindustan Petroleum Corp and Mangalore Refinery and Petrochemicals Limited have been looking to buy Venezuelan crude.
The head of Abu Dhabi National Oil Company, ADNOC, said global oil demand will remain above 100 million barrels per day through 2040, while demand for both liquefied natural gas, LNG, and electricity will grow by 50% or more. Managing Director and CEO Sultan Ahmed Al Jaber told the India Energy Week conference on Tuesday that electricity demand will be driven by the need to power cooling systems as well as AI infrastructure and data centers. Demand at this scale and pace requires investment in all forms of energy, Al Jaber said. The biggest risk is not oversupply, it is underinvestment. Next, we have the top news in metal markets. Gold climbed on Tuesday, hovering just shy of the $5,100 per ounce mark breached for the first time in the previous session, as uncertainty around U.S. President Donald Trump's policy-making prompted investors to seek safety in bullion. Spot gold rose 1.2% to $5,073.52 per ounce as of 11:55 GMT. It hit an all-time high of $5,110.50 on Monday. U.S. gold futures for February delivery eased 0.2% to $5,071.20 per ounce.
Copper dipped on Tuesday as investors booked profits from the metal's sharp rally and waited for the latest U.S. Federal Reserve decision on interest rates, while tin prices leapt to an all-time peak. Benchmark 3-month copper on the London Metal Exchange was down 1.2% at $13,038 per metric ton in official open outcry activity. It hit $13,311 on Monday, close to its record high of $13,407 set earlier this month. The market is seeing some profit booking, which has led to price declines, traders said.
We will now look at the top news in the agricultural sector.
Chinese importers secured up to 10 Canadian canola cargoes following Prime Minister Mark Carney's visit to Beijing earlier this month, 2 trade sources told Reuters, easing supply tightness and potentially displacing Australian exports. Canadian canola is expected to be shipped between February and April, 2 traders with direct knowledge of the deals said. Each cargo is of around 65,000 metric tons. 10 cargoes, or around 650,000 metric tons, represent over 10% of China's canola imports in 2024 and about 26% of its total imports last year. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.